A volatile day for Palantir shares on the back of earnings. It was down 10% in the pre-market, but reversed course, now up 9%. Earnings beat, but net losses doubled. Meantime, CFO David Glazer said the company is considering holding Bitcoin on its balance sheet and said it would now accept Bitcoin as a form of payment. Joining us, Roger Monteforte, founder and CEO of Forte Capital Group and a Palantir shareholder. He bought more shares this morning while the stock was down. Roger, great to have you with us. First and foremost, what do you think the trigger was for the shares to turn around? Was it that Bitcoin announcement?
No, I don't think so. I think it was just, I think the market kind of came to its senses with the fact that the company posted a fantastic quarter. I think, the trend on this particular earnings season, given how volatile the rotation has been and aggressive the rotation has been out of growth stocks, I think the kind of knee-jerk reaction was to simply, sell the news. I think, but as investors in the street had time to take a look at the numbers and really do a deeper dive, they realized that this quarter was actually phenomenal. And as a result, I think, the action shows that in the price over the course of the day. So
you were buying more shares this morning?
Yeah, absolutely. Absolutely. I actually stepped in pre-market and bought some shares considerably lower than where it is right now, under $17. When we look at this quarter, we think it really highlights the scalability and profitability of the business. Q1 revenues are up 49%, operating margins are up 34%. But I think the big takeaway from this number that you have to look at is the adjusted free cash flow that came in at $151 million. You have to realize that's a massive beat because the consensus had the company losing $28 million. So $151 million versus a loss of $28 million. And on a year-over-year comp, it's a $441 million increase in free cash flow year-over-year. So I think this really illustrates the fundamental difference between Palantir and other high multiple software companies that continue to burn cash. And this is the narrative that we've been pounding on this company from day one. As people question the valuation or question the validity of the company, just look at what they've accomplished in a very relatively short period of time as a public company. And they clearly demonstrated that they will be a profitable company, and they are a profitable company as it sits right now, which is unlike a lot of other high-flying companies that can't demonstrate that at this point.
I mean, it sounds like you're really trying to draw a distinction. The shares have been cut in half, basically, down to 20. They were trading in the high 40s at one point. So do you think that is a broader move around momentum and growth names and higher valuation post-IPO names, or is there some misunderstanding here about this stock and this story?
No, I think the $40 number last year was just a matter of just the name getting ahead of itself. Going into the lockup, the float was very small, and there was a tremendous amount of buzz around the name. And I just think it got to a valuation that at that particular point in time wasn't really justified. But when you look at what the company has done since that kind of very frothy move to $40 to $45, going into lockup, and I think the last time we spoke, it was trading between $22 to $25, and now I think I haven't seen it recently, but I think it's up close to 20 or over 20 right now. So it's really I think comparatively to other companies, the sell-off, taking out that one parabolic move to $40 or $45, but since the lockup has come off, I think it's outperformed other high-flying names.
Shepard Smith here. Thanks for watching CNBC on YouTube.